I want to start talking about paper 3, which is your first individual paper. So we start getting used to thinking individually. So I was thinking today, I should probably give you an overview where this class is going next year. So you have a sense of what we're going to be building. So you've done your industry analysis, you have companies to assess. So some of you are asking, well, do we have to pick one of these companies as a group? What's the goal? You could pick all three of it. Let's see, if you have 3 companies, you could pick all 3 of them. You could pick none of them. But the goal is to build a portfolio. So you don't see this here, but we'll see it next year with the new team. So you're testing this out for them. They're going to limit the class next year to just 20 to 24, so it'll be much smaller. So that will help some. So I really need your feedback on this, but you're asking where does this go? It's actually going to go into a portfolio. It's a stock portfolio. And it's 100% stock. I don't think they're going to let us do options. I love doing options. We'll talk about that maybe a little bit. How you can use options to execute in advance and make extra money while you're waiting to execute. But I don't think they're going to let us do that. Let me give you a sense of the portfolio and how it's going to look. So portfolio starts as sector ETFs weighted in line with the S&P 500. So technology is 32%. We'll have 32% in a technology sector ETF. All right. So very passive. We should match the S&P pretty closely. And then at the end of the semester, the teams are going to provide your buy recommendations. So you're gonna say, okay, we assessed 5 stocks. We recommend these 2, or we recommend these 3, or we recommend 1. Hopefully, you'll find at least 1 you like. Or your buy list with target prices. So if you're like I am, I love Costco, but the price is too high. But I might say, hey, I'd be willing to buy Costco at this price. So you have a target price. So this buy recommendation, we can buy now. We can put a limit order. You remember what our limit order is? Say buy Costco, but only at this price. If it falls at that price, buy. So those would be our choices. I'd rather do it with put options. So with put options, I can say, hey, just sell a put option at that strike. And then if it hits that, you automatically get it through the put option. And if it never hits that, what do you get? You get to keep the put option premium, which is a wonderful thing. But I don't think they're going to let me do that. I've seen other schools, and maybe I'll use this as my argument. I know Baylor and some of the other schools are doing that. And it's a really good strategy. I highly recommend it. So what are we going to do then? So up to 50% of a sector ETF will be replaced by student buy list. So tech stocks, okay, you got 32% in tech stock ETF. We're going to take 16% of that and put it into the tech stocks you recommend. So that's how we would do up to 16. We may not do the full 16 because we want some diversification.
And how much money are you guys gonna?
I think it's a few million, like $4 or $5 million, something like that. So it's a sizable portfolio. Yeah, we finally will have a fund. Their target for the fund is a little bit unachievable. I think they're a little, I don't know what they're saying we're going to achieve. We're going to be using UTMCO as the broker. Unfortunately, I was hoping we use the regular broker because UTMCO's a little expensive, but we're kind of required to use them. But essentially, you see what you're working toward. We won't be able to do it this semester. Maybe I'll do it in my own portfolio to test it. We'll see. I've got a portfolio for a charity that's a few $100,000, but it's sizable enough to be able to do this, and I can test it, make sure it works. make sure everything's lined up. What would y'all think with a portfolio like that? I mean, if you give me good stocks, we should beat the index. We still have half of it in the index sector. So we're trying to find something that's workable. The challenge is in a normal portfolio, you're looking at stocks all the time, making recommendations all the time. Here, we just have one semester, we got to go. So, so it would give you a little bit more emphasis to look and see how your stock did. You'd be kind of upset if it sold off automatically suddenly.
I'm just curious, whenever, let's say they usually be saying it's only one semester, then how would you just end up selling off if it came to?
Well, that's where the target prices are important. So we would definitely have to have something that says, what is your target to sell? So the target, I guess I should have said that. So I need target prices for all. So you say, okay, I want to buy this at 200, but our target price is 275. If it's 275, we'll sell it then. Yeah. So we're waiting for it. The other thing we might also have is sell discipline. What is the price when you admit it was wrong? So we'll think about that as well. Maybe not with this group, but you might say, okay, I want to buy at 200. I got it 200. I'm expecting to go to 275. I just spelled a 120. At what point do you say that was wrong? Let's get out of it.
Just stop loss.
Well, we could do some kind of stop loss in there, some kind of, yeah, depends, part of this is I'm the only one managing portfolios. So, it's like I can't go on vacation. So it's gonna be a little bit tough. I've done option trades while riding my bike, so that's possible, but I don't know if I've ever done a stock trade while I was in Costa Rica, so I can't remember. I probably could do one. I don't know if I've tested it or not. So we got a few. There's gonna be one other professor who's gonna be there like a backup, but he won't be actually involved heavily. They have to have a CFA, so I'm a CFA, and there aren't that many professors with CFAs because they all got PhDs, which I don't have. So it's gonna be a little bit of a challenge to get all this work out. So we'll have the summer where nothing's going on, but I still got to manage it and watch it. So there's several things that have to go on. So this class won't be doing that as much, but we do have to be really specific. Target prices you want to do anyway. That's pretty common for a report like this. Even if you're not recommending to buy, you want to say what you think. The target price is simply what you think it's worth. So we'll be working on that. So it's essentially students will be running this portfolio and we'll see how it does over time. Hopefully it will be a strong portfolio. All right. So let's talk about paper 2. I'm seeing more students on cell phones. If you do that, just makes me want to quit immediately. So y'all can kind of hold back on cell phones. I know it's the way the world is now. I spoke at a conference for this one person, she was on their cell phone the entire time, complaining about how much their students use cell phones. And it's like, so I know we have smartphone zombies everywhere. It's just irresistible. All right, so paper 3, and I can't remember exactly how. Let's look back at the rubric because I have reorganized this. So let's look back so we know exactly where we're going with this next one. I know you're focusing on paper 2. We've got to start paper 3 because there's a lot in paper 3. All right, so paper 3 is actually a fairly straightforward one. This is essentially your overview of the firm, overview of the company. It's going to include the SWOT, the value chain, economic moat analysis. You can get SWOT analysis from Merchant Online. You can get value chain from probably ChatGPT. I haven't seen anything that does value chain in the resources Natasha has given us. So I don't think you can find that, but you'll definitely have SWOT there. I think I encouraged y'all earlier, even though you're working on paper 2, look at the SWOT for your company because the opportunities and threats are often issues you want to bring into paper 2. Opportunities and threats are usually industry issues. So to make sure you're not missing something. I haven't tried a SWOT with ChatGPT, but I guess it's going to be probably as good as Merchant Online. So how much are you going to do with the company overview? So it's going to be different company by company. So these are the kind of things you could cover. I would start by reading their annual report, look at the marketing hype at the beginning, try to get a sense of who this company is, how do they distinguish themselves from the competition. So what is unique about this company? Does it have some cultural issues, uniqueness? That's, characteristics you don't see anywhere else. Is there a founder still involved? I think someone's doing Meta. If you're doing Meta, you're going to have to talk about the founder and what his transition plan is going to be. What are its major product lines? You're going to do similar things in paper 3 that you did in paper 1, but you're going to focus it on your company. You might do another pie chart. I would really focus in on, this product life cycle. What are the products that they're starting to develop now? What is the growth rate there? What's that market for that? What are the products that are dying off? Now Apple stock fell because people were so excited about the 16, I guess it is, or whatever the next last Apple is. How big is the Apple phone to Apple's overall revenues? What is it today? What was it before? We know the iPad is not as big of a deal, and certainly not the desktop. What is the big seller? I was shocked at the Apple Watch. I really didn't think that was going to work at all, and then I'm seeing it everywhere now. Y'all probably all have Apple Watches in here. People buying for the exercise needs, but so you want to figure out what is that? What are they doing there? Obviously, Apple has a lot of software going on as well. There are ways to break these into segments. So Capital IQ has a segment breakdown that you can certainly use. Bloomberg has a segment breakdown. So if you want to figure out how they're breaking it down, but use the annual report to see how do they list their products. Look every place you can to figure out how they're breaking the company up. What are the most important products? One thing with Bloomberg is you can get a lot of history, but you'll notice there's a line that just stops, and then they move it somewhere else, or they split it. And that to me is interesting, just in the way they break those up. This is essentially the economic moat, the competitive position, and the other thing you're really up to is sustainable competitive advantage. That's a huge part of this paper. So there's two parts of that. What do they do better than anybody else? And how long can they maintain that? What is the moat? What is the protection of them to maintain that? That's extremely important for every firm. All the firms you're doing have something powerful to them. So if you look at Adobe, it's the switching costs. Well, who are the competitors? Who's coming in? Who could take this away? How important is this product to their end user? So this is a really major section. If you think you have a company that doesn't have any competitive advantage, they're no better than anybody else on anything. They're just out there doing stuff. It makes this paper pretty tough to write, but you got to somewhat address that. So spend quite a bit of time on that. That's a major part of the paper. We're seeing a lot in China and even in Latin America, firms that are not actually going into China, and instead they're doing a partnership with a firm in China. It's kind of a slow way to get in. What are those alliances? What are those joint ventures they're doing with other firms? Someone's doing Provers, right? So you'll have to definitely talk about Albertsons and see where that is. If your firm could be a takeover candidate, hopefully they don't get taken over during the semester. It makes it really tough to do valuations when you no longer have a stock price. So hopefully, I don't know any of your firms that are necessarily takeover candidates, but it's always possible. I don't know what we'll do in that case. We'll have to kind of just make it up as we get there. But do think about that. Who would take over this firm? Obviously, Apple or Microsoft, that's not going to be an issue. But with the firms that are, 5, 10 billion in market cap, those could certainly be purchase firms. I think most of y'all will talk, if not sales overseas, you talk geographically, where are they? If they're only in the US, where are they in the US? What states are they moving to? But overseas is important. Is anyone doing Lululemon? That's an interesting Canadian company that's slowly expanding. I think Costco is slowly expanding. Some firms are very, very deliberate in how they expand, and you want to really get into that. So ask about this over time. Capital IQ does have a geographic segment. It may not be real useful to you, but it's always useful to just see what they have. So they have US, sometimes it's US and other, sometimes it's US, Europe, Asia. Sometimes they have specific countries. If I were doing Meta, I don't know if I can get it here, but Meta or Facebook users by country. You can get quite a bit of data. So India is already bigger than the United States, maybe not percentage wise, but you could do percentage. So you could say, okay, Facebook has 378 million users in India. What is that a percentage of the population? And what does that compare to US? That might be more interesting than just saying 378. So it's 378, but that's only 20% of the population, where they have over 50% of the US. So then you start asking, well, what if they grow in India to the same level in the US? How much growth would that be? You see that as a great growth. Now, why is China not up there? Facebook's not allowed in China. Do people use Facebook in China? I bet they probably do, but it's not on the list. So you got everybody China, you got the three largest countries, but China's not up there, Brazil. So you see that related to population all the way down to Algeria. So you do get that kind of information. You can say Costco stores by state. And you'll try to find some big states where they're not there. So they are in California pretty strongly. New York is only 19. So New York is a place that could certainly grow. I don't think there's a Costco like in Manhattan. I'm not sure Costco would work in Manhattan. It'd be an interesting thing. But if there's one 5-10 miles away, it might make some sense. New Yorkers don't normally come home with 6 weeks worth of tuna. And it's kind of the advantage living in New York. You buy dinner every night when you come home. It's kind of a nice fresh meal every night. So some of these states that may not work. There's 41 in Texas, 140 in California. That's kind of interesting. If you could compare that to a Walmart or something else, you're trying to get a sense of where could the growth happen, where could they expand. Is anyone doing Costco? I can't remember.
I don't think it was on the buy list.
Uh,
We might have
yeah, I
we might have- I don't think it was on the buy list.
okay. Well, the nice thing about Costco is they tell you explicitly that they're adding 50 stores a year, and it's pretty straightforward. So that gives you that. But where are they adding? That's pretty important. What states are they adding those to? Why is there only one in Maine? So you can definitely, just with quick Googles, you can definitely get a sense of what the growth prospects, and that's really, really key to all of this is growth. We're trying to find growth. It's growth, but it's also protection of growth. That's why the economics come in. So they've got good growth. What keeps the competitor from coming in? So you're going to have to spend some time there. And this is part of the competitive position. Where do they rack up versus competitors? At USAA, our CEO is like, USAA's market share is going to grow every year. When I hear a CEO say that, my question is from whom? If our market share is growing, someone else's is declining. Who is this declining? Who is USA taking business over from? Is it, Navy Federal Credit Union? Is it JB Morgan, Citibank? Where is that coming from? You can't just say we can keep increasing our market share, because if you got a winner, you have to have losers, and most losers don't just sit there and throw in the towel. They're going to do something in reaction. So I don't know how with an Apple, you could certainly look at Apple phone sales versus Samsung now versus 5 years ago. You can certainly do a Tesla sales versus GM or somebody else. You can certainly, with the Chinese electronic car makers, you can certainly compare that. So points in time to kind of show how is this firm doing versus competitors. You could certainly show store growth of stores versus the competitors. Those are all things that are pretty easy to get. Bloomberg does give square feet, does give number of stores. I don't know about Capital IQ. I've had tough time getting things like employees, and like in Capital IQ, when you bring in employees, gives you 10 years and it's the same number all the way across. So there's obviously something wrong So Cap IQ has a few quirks that have to be worked out, but that's what you're looking for, not just your firm, but anything you're doing with growth of your firm, try to compare it against a key competitor so you can show is your firm doing better or doing worse. Labor issues, you talked about that in the Porter's Five Forces for your industry. Now you're going to talk about it with your particular company. If your firm has, I can't think of your companies, but if your firm has a labor union and they're going to be negotiating new contracts, you're going to have to spend a couple of paragraphs on that. You have to talk about how it went last time. It can be pretty critical. You may not do this one, but think about it. If there are already special legal liability issues that they're being sued, anything that's major, you're going to have to put that in this section. I doubt you're going to do this, but some firms do have significant currency exposure if they're overseas. So you may have to talk some about currencies, but just be aware firms in their annual report, they have a list of risk and a lot of them put currencies, even though it's like a really small risk. So just because it's listed as a risk doesn't mean it's important. So there's things you can throw out. All right, so that's somewhat of your introduction. I would be real careful with logos and marquees because you want this to be objective. You don't want to make it look like an advertisement for your firm. So be careful about putting that kind of stuff in your paper. Let's look at a couple examples. One of my favorites is a really old one. Well, actually, the Chipotle one is pretty good. Is anyone doing Chipotle in here? You can use these example ones. You can't copy and paste them, but you can certainly use them. So the business breakdown, there's one on Chipotle, right? I think, I can't remember. So the big thing with restaurants, you got DoorDash, you're going to talk about that. That's going to be pretty important. But Chipotle has tried this thing of the centralized kitchen kind of thing that they're doing, which is really interesting. It has pretty big impacts on their operations, positive and negative. So you definitely talk about those. So there's a lot going on. So what about company history? Spare me the paragraphs on this. Don't go overboard. If you can do it as a timeline, that's fine. I don't need to know what they were doing in 1903. It's just not that important to me. I actually think Business Breakdown does a really good job of company history. They hit what's important. A lot of times it's a founder versus a founder. The last few I heard that they'll talk about a particular CEO who had a huge impact on how they looked at their capital returns or whatever, and that the person who took over, that's 2 or 3 or 4 paragraphs. It's not 3 pages. All right. So be careful in the company history. Yeah, with Chipotle, I would maybe mention that they were, a spinoff from McDonald's. That could be important to talk about. A business overview. Yeah, give some sense of what they do. Are they different than others? So Chipotle, supposedly really healthy food. I don't know what all they advertise. I've eaten at Chipotle like 4 times in my life, so I'm not an expert on them. One thing he did do in this paper is try to fit Chipotle in with his industry overview, where he talked about casual dining, fast food. Where does Chipotle fit into that? So he does talk about that. How many stores? So again, make sure you give some sense of growth. How many stores are they adding? How many stores have they added? He does show where they are versus competition and does a good job here comparing one year versus the other. Restaurants lend themselves pretty easily to this with one big caveat, and that's franchising. So McDonald's revenue, is that the revenue of the McDonald's stores or is it the revenue of the corporation? The revenue of the corporation is going to be much smaller. So you really want the revenue of the stores when you're doing market share. So be real careful. If you go to McDonald's annual report and get their revenues, that's not McDonald's revenues. All right. Statista should give you those revenues and you should be able to find the revenues of the franchises because the franchises are only paying, 10, 20% to McDonald's. So it's a small fraction. So be careful. That can be a real trick, but I do think Statista does a good job on that. So, but be careful, read the footprints, make sure you're careful on that. So McDonald's is 40%. It was 36%, or now it's 36%. So McDonald's is coming down. Starbucks was going up, which is probably not true now. Chipotle went from 1% to 3%, so that's a pretty good growth. Panera, I don't know who, any of y'all eat Paneras? Does anyone eat Paneras? A $40 sandwich that size, I don't get Paneras, but they're about the same size. So it works pretty well for other industries. It doesn't work as well. If you're doing Meta, it gets a little tougher to do those kind of comparisons. I will say for Meta, someone doing Meta, I can't remember. Someone was, I think. For Meta, Capital IQ brings in the number of users, weekly users, monthly users, advertising revenue per user. Those are all great things to use that work pretty well. So if you have a firm like Meta where you have either users or whatever, how they, Uber, how many drivers, how many passengers, that kind of data you want to bring in. As much as you can bring that in and compare it to another firm and compare it over time is really helpful. I do like the 2 pie charts. That can be pretty helpful. This one's a little hard to read because there's so many companies. So you may want to talk about which ones change the most and why. Sales overseas, always important. All right, on this risk side, I don't like a section on risk. All right, so a lot of students add that. I'd rather you put that under SWOT, strengths, weaknesses, opportunities, threats. Your threats is risk. Otherwise, you're going to have risk in there twice. But do read your company's annual report on risk. What are they saying? What are their major risks? Obviously, for Chipotle, they've had food poisoning problems. That's probably going to be a risk that they have to address. If they're selling chicken or beef or anything that can have, these diseases, that's going to be an obvious one. But to Chipotle, I'd probably talk about their previous issues and how they handle that. That would be something important under the risk side. If you do have some strategy they're trying out and it's not going well, you definitely want to have that under risk, under threats or weaknesses. Key competitors here depends on what you did in paper 2. So if you really cover that well in paper 2, I wouldn't do that again here. So look at what your group did on paper 2. If you covered all the major competitors, talked about them, I wouldn't do it again here. With Chipotle, I think most people know Chipotle anyway. So then he has labor issues. I would definitely, or a service organization. Well, I think every company you're going to have to talk about labor. I don't think legal issues would they be that big of a deal here. All right, so y'all see the kind of things. So that took about 4 or 5 pages. You want to make sure the person understands who this firm is, how they're growing, where they're growing, what their products are, who their competitors are in a way that doesn't make it redundant with paper 2. All right, questions on the intro? All right, so this is the part I hate the most in papers, and that is the management. Your management could be one person, a key CEO. That could be really, really good. I don't need biographies. That's of no value to me at all. So how do I do management? I do it like this. I find my CEO in YouTube. I love this guy. He's really, really good. I want to hear what the CEO says this firm is all about. So that's why I love Business Breakdown when they have the CEO speaking. They don't like having CEOs, but I love hearing a CEO. There's a lot of YouTubes of these CEOs. We were listening to one for Bristol Myers, and boy, I didn't like what he was saying. From my knowledge of pharmaceuticals, we were almost going to invest in the stock, and we're like, no, I don't like what he's saying. I don't like that vision. Essentially, he's going to grow the company by essentially exacerbating the problem with healthcare and overcharging him. That's not a good move. This guy's quite exceptional. He's really, really good. You can see there's several of them. CEO talks store openings, inflation, holiday season, and the labor pool. What more do you need? So what is his vision? What is his view? And he's particularly good in sound bites. He can describe Costco in a very short number of words, and that's what you're looking for. But you're really, really focused on strategy. You might even try the word strategy, but you're really focused on strategy. How is the CEO going to change this company? That's what management does. Management does different things. We were doing this, now we're going to start doing that. That's what you're listening for. It's really, really critical for these firms. I don't know how many videos there are. Does it tell me how many videos? There's a whole playlist on working at Costco. Benefits culture. There's a lot of stuff there. Give me one of your other companies. Kroger. I don't even know who the Kroger CEO is. Is that he? Sometimes you'll get them on the investments channels like Bloomberg. They tend to ask more kind of investment type of questions that you'd want that could be really, really valuable. So consumer strength and Albertson merger. So they're right there. You have some of him talking about the Albertson merger. I think I saw this one. I recognize him. So plenty of them, right? They're all over the place. Look at the dates. If it's like 10 years ago, yeah, probably not worthwhile. But if it's within the last couple of years, look at it. Kroger's is obviously struggling. I mean, I'm amazed Kroger's has operations here in San Antonio. I don't know if they still do, but seeing those Kroger trucks driving around just was shocking to me. That's a pretty big change in strategy. I think we talked about this before, seeing the Amazon trucks, seeing the HEB cars, when they're buying actual physical assets that are driving stuff around, that's a pretty massive strategy switch. What are they saying about curbside pickup? I was in a Kroger's once where they actually had a daycare. So, okay, that's interesting. Could that go somewhere with people go to Kroger so they get rid of their kids? I mean, I'd probably go and then kind of shop for 3 hours. It's like, I don't think it's free daycare. I don't know exactly how to do that, but if you're looking for those type of strategies, what are they doing? So Business Breakdown does a great job of that. So if you can find a firm that's similar to your firm and listen to the Business Breakdown and see what kind of strategic things they're talking about, they do an excellent job. Your Salesforce CEO right there. So those can really, really work really well. The other thing you can do on management is the firm's earnings conference call. You might listen to the last one and see if management is speaking on that call. Y'all know how to do earnings conference calls. You can usually find them on their websites. The problem with Kroger websites is going to be selling me a bunch of groceries. So they should have a link to their earnings conference call somewhere in here. They're boring as they can be. Here's events and presentations. 2024 earnings call. They may actually give you a transcript of it, but yeah, you may have to register it. It might be 45 minutes to an hour. If the CEO's talking, listening to them, especially listen to how the CEO answers questions from the sales side, research side. What are they asking and how they respond? You get some really fun ones where Elon Musk loses his cool and cusses them out. Some of those are kind of interesting. That certainly gives you some insights on the firm. These tend to be kind of boring because they tend to, even in a bad earnings release, they try to downplay everything. They want to make it sound like there's nothing really that big. So your key here is to figure out who is the management, what's their focus. So I think I talked a little bit about this, like why is MBA doing well and Boeing's doing badly? So Boeing's run by Harvard MBAs, MBAs run by airplane engineers. I think that's pretty important. What's their background? So if I have a technical firm, I want to know, is this a Harvard MBA finance person, or is this someone who has a technical background on the firm? So it makes me kind of curious with Adobe. Just who that person is. AI innovation, expanding AI. So does he know anything about AI, or is he just parroting what his AI staff is saying. So this is a technical person, or is this some Harvard MBA that knows, has this whole thing? I don't know anything about him. With Bristol Myers, for me, for a pharmaceutical, I actually want a scientist as a CEO. And so Bristol Myers CEO was a scientist. He actually developed pharmaceuticals. That's what his background was. You got a firm as complicated as Bristol Myers, that's the kind of person I want as a CEO. That's my preference. I don't like Harvard MBAs. I don't like Harvard. I don't like case studies. So I don't want them running my companies. So I'd much rather have someone who is an expert. With HP, when HP hired a woman from retail with no computer background, but she turned around some retail shops. That's kind of interesting to me. I would rather have someone running HP that understands the technology they're selling, but they tried something new. Let's try something that's going to make us more of a retail shop. How does that work? So you want those kind of discussions in there. You might be able to do your entire discussion only on the CEO and nothing else. If there is another key person in the firm, talk about them. Obviously, if you're doing Berkshire Hathaway, which none of you are, you're going to have to address what happens when this guy goes down, who's going to take his place, what is their background. So if you have someone who's in their 60s or 70s or 80s or whatever, think about succession. So that may be the next person you talk about. Who's going to take this person's place and what is their background? But YouTube is excellent. I think YouTube's even better than the conference call from the firm. Look at the annual reports, see what they're saying in there is about strategy. But again, I don't need a bunch of biographies. I have a lot of students, they just go to Bloomberg, copy and paste and give me a biography. I don't care what school they went to. It can be interesting where they came from, so that can be useful. You think about a firm like AIG, they had 2 CEOs in 50 years. That's kind of interesting. That's good news and bad news. But what happened when the second one left? The firm went under. So he was such a micromanager that when he left, there was just no one watching the hen house, and it just got completely destroyed. That's kind of the thing with USA. When Bob Davis left, a very micromanager, Joe Robles was great, but over time, it just got sloppier and sloppier. They went from someone with massive control to sloppiness. So those kind of things, but be careful. I'll show you an example one, but I'm probably not going to like it. But because I like very few of these. So management or wherever, no, that wasn't it. Management overview. Steve Ellis, chairman. He founded Chipotle. Okay, so you got a founder. He is co-chief and appointed for 2 years at Stars Residence. Yeah, so I need to hear strategy. His main focus on the firm is this. That's really what I'm looking for. He's adamant he's going to do this or whatever. I need to hear that. You should be able to get that from. So he's got a bachelor's of arts degree. How's that going to impact Chipotle's growth? I don't know. And art history. What is art history going to do? I took art history classes. We didn't talk about restaurants or anything in there. So I don't know how that's going to help you. I do think it's important if he's a founder. It's always important if a founder is still there. Or if you got like Starbucks, the founder is like constantly breathing down people's necks. Like, that's kind of a bad sign. Like he's just won't go away. That's probably important. So you could with Starbucks talk about the previous CEO just because he's so much involved in the firm. Now they got the chief executive officer. This doesn't do anything. It's just a bunch of stuff to read. That's just kind of interesting, but it doesn't drive to what's the strategy, what's the growth of this firm. That's not anywhere in there. So they do this. This isn't bad. These are the goals inferred by management for company growth. That's probably the most important thing he did. And that's not a bad way to do it. Quotes from management are the most powerful. So if you can find some good quotes. And what I'm really looking for, so like McDonald's, I heard the McDonald's CEO, we own McDonald's stock and I sold it right after this. So I thought McDonald's was a turnaround situation. They need to do some really, really critical things. McDonald's was losing some of their steam. And that was in his presentation. He was like, everything's good. It's like, it was, yeah, we like everything we're doing. We can't think of anything new to do. It's just so kind of visionary at all. So he got out of stock and they fired that CEO pretty quickly. But, and now they have had some of a turnaround. Yeah, I need to hear more than that. So I'm thinking about the future. And you're always thinking about what they're going to change. What's the major thing they're going to change with this firm? I don't think I've ever heard a great CEO said everything's fine. There's something major they're working on that they want to put their hands on and change the firm. So look for that. So growth will primarily increase through opening more store locations. What is known as A model areas. They probably need to describe that some. Inclusion of opening additional 4 location newly formed. So they got the shop. Have y'all heard of Shop House Restaurant? So if they've got a new brand name, something they're doing, you know, you want to talk about that. Offer catering services and operating. Have y'all been catered by Chipotle? That seems like a kind of a strange model for them. So it's not real strong, but I mean, it's there's at least something there, but make that the most substantive part of your management discussion. Questions on management? All right. Then your SWOT. So you'll see SWOTs done different ways. Let me try one for, I'll do Kroger's. So we'll see what ChatGPT does. And it changes SWOT to spot. So you have to, I'll do SWOT in all capitals. Is it Kroger or Kroger's?
Kroger.
So you'll get one in Merchant Online. What do you think their number 1 strength is? The same market leadership, one of the largest grocery retailers in the US. The brand was there. Diverse product offerings, so you can certainly talk about SKU. That's something we can often talk about. Strong supply chain, which is something you're going to talk about a lot. You can talk about strength, weakness, opportunity, threats. Supply chain as a well-established and efficient supply chain that enables competitive pricing and product availability. You're going to need more evidence than that. The private labeling. Anybody go to Kroger because of the private label? Anybody go to H-E-B for their private labels? So it does work. I don't know about Walmart. Does Walmart have a private label?
Great value.
Is it good? I mean, good enough to go buy it just for that. So I don't know what Kroger's private label is. Omni-channel presence. I don't know so much about that. So we don't know because we don't have a Kroger's here, but omnipresent, omni-channel, y'all know what that is, right? So it's online, it's home delivery, it's in-store. Definitely going to talk about that. That could be under strengths, could be under opportunities. We definitely want to talk about that. Customer loyalty programs. I don't know how strong Kroger's is. I don't know that much about the program. I did listen to one business breakdown on a hotel chain that I didn't know that much about. And they talk about how critically important their loyalty program was. And I had no idea because I'm actually in their loyalty program, forgot. So, oh, wow, I'm in the program, but I don't use it. But it was a hotel, I can't remember which hotel chain it was, but that was a massive part. They have a huge loyal returning customer base for that loyalty program. I had no idea. So I don't know if that's true with Kroger's, what Kroger actually does. Weaknesses, what would you say the number 1 weakness is? I don't agree with this one.
Number 1 weekly.
Yeah. Don't say Walmart. Walmart is more of a threat.
Pricing.
Yeah, they say narrow international presence. Their operations are limited most of the US, which restricts. I don't think that's a weakness. High operating costs. Yeah, I don't know. They don't say comparatively, so that's kind of weak. And then, okay, their number 1 is limited international. Their number 3 is dependency on US market. So number 1 and number 3 are the same one. Price competition, fierce competition. I don't know if that's a weakness. That's more of a threat. So capital, ChatGPT, it's okay, it gives you some ideas, but there's a lot of weaknesses in that. What's their number 1 opportunity? That one I kind of would agree with.
Opportunity and what's that?
What could they do new that they haven't started yet? They don't have any, something they're not doing now, but it would be a major advancement for the firm.
Kind of like first side, what they do.
Well, they say e-commerce. Then they put sustainability initiatives. I mean, it's, I mean, I like to, you know, I want the globe to survive. But is that your number one concern for Kroger's? Probably not going to be a major part. We're going to talk about ESG here, maybe not tonight, but so just put in your notes now, we'll talk about it. You probably should have an ESG section. 2 years ago, you had to. Today, it's actually losing steam. But if you're going to use this on LinkedIn and put it on LinkedIn, you want to have something that says ESG in there. And you can do 100% of that from Bloomberg. Bloomberg has an ESG function that you can pull everything. So I'm not that picky on ESG. I just want you to have it. I know like in the CFA research challenge, you have to do ESG in there. It's required. So it's actually becoming, so you want to start incorporating it. I'm not saying I don't care about it. I just think it's a lot of smoke and mirrors right now. A lot of firms are saying stuff that's really not all that material. Health and wellness trends. You know, I don't know if that affects Kroger's more than anybody else. And then threats. What do you think threats is going to be? I kind of already mentioned it. Competition, Amazon, Walmart, Costco. I would be really interested in Kroger's on their market share, but it's kind of tough to do. But I think you probably can get Walmart and Costco's groceries separated from everything else. So you want the groceries by itself so you can compare Kroger's if you can get that. They say economic downturns, is that a threat for a grocery store? That's a threat for Ford, but that's actually probably a benefit for them. Rising labor and supply costs, definitely rising labor costs is a threat with the minimum wage issues going around. I think that's going to be true for a lot of people. Changing consumer preferences to online shopping, specialty stores. I don't know about specialty stores. Is that like a, oh, I can't even think of the name of them. The Trader Joe's, is that a specialty store or is it even more specialty than that? I don't know. Technological disruption. So yeah, it's an okay list to give you a starting point, but it's not great. If you compare it to Merchant Online, I don't know how much different it'd be. It's possible ChatGPT is still in almost all of its stuff from Merchant Online. But I got like 4 pages worth of stuff in 3 seconds. So, and that was with me typing SWAT. So how do you do it? So I've seen it a few ways. Some students will do it in paragraphs and then summarize with a box at the end. That can work pretty well. If all you do is the box, this is too summarized. So I would rather you have fewer and spend more in-depth time on them than try to give me 20 of them. All right. So a lot of what ChatGPT had, I would probably eliminate half of those because I don't think they're that critical. I'd rather you really get in depth, maybe 2 or 3 strengths. And try to put some numbers to it or something. If you're going to talk about rising minimum wage, how many of Kroger's employees are minimum wage? And you know, if minimum wage goes up, even if Kroger's employees that aren't minimum wage, their salaries can go up too. It's just there's this trickle down. But how much are them? How much does Kroger pay its pay its workers versus Walmart versus Costco? Is there a difference? Is there more turnover at Kroger's versus, you know, definitely versus Costco, but versus Walmart? Would you rather work at a Kroger's or a Walmart? If you had the next 10 years of your life, you had to work at one of those stores, which would you rather work at? So, you know, think about that. It's turnover an issue. So find some that you can really sink into. Don't feel like you have to have 20 of them. He has 3, 2, you know, his numbers are okay, but he probably lost quite a few points or not going more in depth. You really need more depth. So it's not just here's the strength, but what are they going to do with it? What are the plans? You know, you gotta flesh it out more. Is this major for the firm? If they start doing curbside, is that just going to keep them from losing competition, or are they going to actually pick up new customers, or people are going to come to Kroger's as they have in the past because they're doing that? So you're trying to figure out each one of those. If you look at the opportunities and threats, these are very industry, health conscious market, stabilizing sales trends, away from home spending. That's true for everyone. So you really want the strengths and weaknesses to be very, very, very specific to your company. Don't give me generic things that apply to Walmart and Costco and everybody else. What is specific to this firm and what they were doing? That's why I say the thing they did in San Antonio, do they still do that? I gotta ask, because I haven't seen their trucks in a while. Did they shut that down? Kroger delivery groceries in less than an hour. So it's still there, right?
I was like, they're closing them down.
Or they, I haven't seen their trucks in quite a while.
Like, I think that they were closing them down because there wasn't, HEB was still taking over.
Yeah.
Yeah, they're, it's coming out of Austin.
I mean, stuff like that, when I see that, I mean, that's like very, very interesting. That's such a major strategic change to a firm. So we're going to be in San Antonio, but we're not going to be stores. That's a huge, huge, huge strategic change. Right. So a lot of students, SWOT is go to Merchant Online, reword theirs, and you're done. And it's got to be much more in depth than that. I'd rather you have one strength you really get into than give me 5 and they're all kind of fluffy that could apply to any store equally. That's just, there's no strength there. Your goal is to figure out the value of this firm. The value of this firm is going to be how they're going to grow versus everybody else. And you grow differently by doing different things. So you've got to really, really focus on that. So make the strengths and weaknesses as company specific as you possibly can. And the opportunities and threats can be much broader, much more industry type of issues. And then you will have a conclusion at the end. All right, this paper might be the shortest of the group. It's still somewhat open-ended. After this paper, we have much more specific templates that you have to follow, so we'll get much more specific after that. Let me show you another example. If I can keep everybody from leaving all at once. Oh, I don't want to show y'all Microsoft. Is anyone doing NVIDIA in here? Are y'all doing any of these companies? Let's try the second NVIDIA. This one probably has a student's name on it because it's a PDF. Yeah, Devin. Devin's killing it in healthcare, but he did a paper on semiconductors. So you can see what he did there. If you're going to do stuff like this, be much better with your tables. The bullet with, you got way too much white space in there. It's really messing everything up. All right, so define the company. This one, you got to spend a little bit of time on technology if you're doing an NVIDIA. You got to explain the different type of chips, who the end users are. There's going to be some technical in here. There may be some words you don't fully understand, so you're going to have to bring some definitions in. Just do your best. Don't copy and paste, but if you have a definition that's tough, you can quote so that you have a tough time putting your own words. So quote it and then say what I think this means is, or find some way to explain it better. The culture is probably important. He does have some good quotes. So that does help quite a bit. So he has a chart here on major product lines and he shows them over time. That's a very, very powerful way of doing it. Really shows you where the growth, and then you might even ask, well, one thing drop. I'm sure the next graph for 2024 would be off the chart there. He has another one. I don't know how that one's differs from the previous one. So he spends a little bit of time on their actual major products. He has sales overseas. That one gets a little bit tough. If you look at Apple sales overseas, it gets really tough because you don't really know. Since Apple doesn't make their phones, another company does. I've seen it in Capital IQ. It shows almost all of Apple's sales are like in China because that's where they're being built. I mean, they're completely messed up. So, I have to be careful. NVIDIA doesn't make anything. They just develop things and then Taiwanese companies make them. So, this looks like this probably is pretty accurate. So a lot of background. So there's his ESG. We'll talk about what's in an ESG. You notice his ESG is only about 3 paragraphs. That's kind of all I don't want to be cynical, but I just want you to have it in there, right? And you can on something like environmental. Bloomberg has the score. I don't trust the scores. I think they're somewhat manipulated, but they have the score, so you can certainly put that score in there. A couple of years ago, our team won the Texas CFA Research Challenge. It was a firm that had environmental in its name, and their ESG score was terrible. And we really thought the reason the stock was up is because people were buying ESG companies that had environmental in their name, and so they're buying the stock and bidding the price up, even though they're ESG. So we were actually worried about it when Bloomberg publishes this ESG score for a firm that has environmental in its name and they have a really weak score. What's that going to do to their stock price? But have something in there. The SWOT analysis, he did it as a discussion. Just don't make it too generic in there. Obviously, their biggest street is the development, but why is it? What specifically are they doing that makes their developers, their scientists, so much more innovative than Intel's? You know, Intel's just crashing this year. What is about NVIDIA? Is NVIDIA stealing workers from Intel? What are they doing that gives them that huge advantage? All right, here's their management, or you tell me on the management overview, what do you think? He's a founder. That sounds important. Anybody else see that's important in there? He was in Times Magazine, world's top 100 most influential people. You think that's important? I wouldn't put that in there. Number one by Harvard's Business Review as best performing CEOs. Does that sound important? I wouldn't put all that in there. Sorry, Devin, but yeah. This is a really good paper and he's a really good student, but I wouldn't do all of this. The fact that he's an electrical engineer, that to me is important. So we have someone who's technical at the head of NVIDIA. That's probably what you want. You want someone who's probably writing Python code, probably doing machine learning, probably has done it in his career, could probably do the same thing his engineers are doing if he wasn't, busy being CEO. So he's got a master's of science, electrical engineering from Stanford. That sounds impressive. So I think that's important. So the technical skills of your CEO, I think, is very much important. That might be where they went to school. It might be what their previous job was. CFO, I don't care. Do CFOs radically change companies? Not really. They're involved in strategic discussions, but not really. All right, so I would want, there's some stuff in there that's useful, but I would want more. Now he does add the strategic objectives. So that's I counted it as part of his management discussion. You definitely have to have a section on what are they going to do different in the future that they're not doing today. That's going to be pretty critical. Even as a concluding thoughts on management. He talks about listening to them and some video they had, so maybe that's important. All right, you get the sense of this third paper. There is some kind of use your own judgment. All right, I do want to talk about ESG a little bit, but not tonight. But I'm going to show you the notes from on ESG. I'll show you the notes from Damodaran. He has quite a good discussion on what do you want to say about boards, how important are boards, do you have an activist board member? So do you need to go into who are the owners of the stock of this firm? Maybe. If you go into Bloomberg and look at the top shareholders, who's going to be the first two names, do you think? You can guess. Yeah, well, which two? BlackRock, Vanguard, BlackRock, Vanguard, BlackRock, Vanguard. You can see those over and over again. So that's not going to be useful information. But is there some activist investor? Is there someone that's more than 5% ownership? If there's someone in there who's causing waves for your firm, probably not at NVIDIA, but at some firms that's certainly possible. So we'll talk a little bit more about corporate governance when we get into the Damodaran. So yeah, listen to management. Do as much as you can to hear them from a strategic standpoint. Even Maybe listen to competitors' CEOs talking as well. You know, you're trying to figure out. So you say, oh, their strategy is curbside pickup. Well, so is HEB, so is Walmart, so is everybody else, except for Costco. We saw why Costco's not doing that. They want people in the store. So that's pretty interesting. Is curbside pickup going to eliminate the what do you call that? The when you buy something because you're standing in the line, the whatever, you know, they put the milk in the back, so you go all the way back up there. What was it? Impulse buying. Yeah. Is curbside going to kill impulse buying? And how much is impulse buying? How much does that affect it? So, all right. So next class, we're going to talk, we'll come back to this one because we're going to do this one, but we're going to come back to the Motorin notes. He has some good things to say. I'll find that. So, all right, I'll let you out a little bit early. How your paper 2 going? Everybody's participating? There's not gonna be any shocks or like they haven't shown up to any of our meetings. So hopefully that's not an issue. All right. One thing to think of on this paper. Let me get attendance real quick. Not everybody's here. Alfredo, Caspian, Carlos, Miranda, Nathaniel, Luciano, Alejandra, Diego, Reem, Omar, Jared. Jared was here just, oh, there you are. I was gonna say you're here just like a Jake. Jose. MJ, I can't remember what MJ looks like. So, okay. All right. All right. So for this group paper, you have a conclusion for your industry, and really what you're looking for the industry is a general sense of this industry relative to the growth of everything else. You can do the growth versus the world, or if you want to, your firm is like a restaurant and is very much tied to the US. So is this, we're going to talk a little bit about the life cycle. Is this, you know, think about your options. You have startup, rapid growth, mature, and decline. That's true for companies, but that's also true for industries. So none of you are doing a startup industry. And probably, unless you're strong AI, you're probably not rapid growth, but it's probably between growth, mature, and decline. So growth would mean above economic growth, mature would be in line with economic growth, and decline would be slower than economic growth. You don't necessarily need your conclusion to be specific numbers because we're not valuing your industry or valuing your company, but you need it in words. If you expect the U.S. economy to grow at 5%, it's just an industry that's going to grow much more slowly than that. We'll get into that much more detail when we get to paper 5, especially when you have to have some growth rates. And there's several things we can do there to try to get that. And well, also with your forecast for paper 4, it's going to be important. All right. So you need to have a final. I have several people turning papers with no conclusion on paper 2. You need to have a conclusion. What did Porter tell you about this industry? Is it attractive or unattractive? And attractive, he doesn't necessarily say this, but attractive is about growth. Is this above average, average, below average growth? All right. And then if it's above average growth, think in terms of timing. If it's above average growth because it's a new product and it just hasn't saturated market yet, or it's above average growth because it's moving out of the US. Above average growth just because it's the most wildest thing, whatever. If it's the fastest growing because you're selling mainly to this age group and that age group is going to grow out of it and the next age group coming in is not as large, try to think on timing. So I think, you know, there's no such thing as fast growth forever. No industry grows fast forever. In fact, I was listening to the Motorin. He says the same thing I say. He says, you know, hyper fast growth rarely lasts more than 5 or 6 years. And we say, oh, no, there's Microsoft, there's Apple, there's NVIDIA. Yeah, those are the exceptions. Out of hundreds of thousands of companies, those are the few exceptions. Yeah, there are a few. And Intel used to be in that group. How's Intel doing now? You know, it doesn't go on forever. Amazon's not going to go on forever. Tesla's not going to go on forever. Once everybody in the world owns a Tesla car, it's going to be hard to grow much faster after that. You know, so you get the point, and we'll talk about that some more about how do you get to that point of you make sure you have something that's plausible as your assumption. So think about it then in terms, I don't know how many of y'all think you're in an industry that's above average growth? In here? Nobody? Who are our tech companies? Adobe's not above average growth. What was your company?
Universal Display. I think they,
What did they produce at Universal?
oh, like screens.
Oh, okay. Yeah, so screens for TVs are not from computers or cars or,
No, just for TV.
yeah, so that. Yeah, so you start thinking about that, like I haven't had TV forever, I just use my computer screen, but more people are using Apple TV. You know, that was a big deal, right? When the new brand, the new, whatever the HD, whatever TV, I don't know any of those things because I don't own TVs. That was a great growth period, but how long it lasts? It didn't last very, very long. So who thinks they're average moderate growth in line? Nobody? All of y'all are declining?
Moderate growth,
Moderate growth, so in line. So what's your industry?
consumer staples and specifically in like discount stores.
Discount stores. Yeah, that should be pretty. Jared, what's your industry? Which, so you're doing apparel, right? Yeah, apparel should be. So if you think about this one, I get down bottom line, once the industries, you know, they saturated, what is growth? It's gonna be population growth plus inflation. That's the bulk of it. Now, could they get more efficient and their margins improve? Yeah, every firm's doing that, so maybe there's a little extra growth in that, but eventually they've squeezed everything out of productivity they can. So population growth around the world is really declining. We've got like 8 or 9 billion now. Maybe we'll hit 10 billion. It's just not going to grow anymore. There's a natural limit. There's a really great TED talk on that. That's really exceptional, where he talks about why world population growth is going to hit a level and then just stop growing. And we're seeing that around the world. So population growth is not there. And then inflation, you know, that's not real growth. That's just kind of keeping up with the time value money. So ultimately, every industry, that's what they're going to do. The Motorin says every industry has this high growth, its maturity, and its decline, but not every company has to do that because companies can reinvent themselves, start new products, but every product is going to eventually get into that mature decline stage. I mean, you think about Blockbuster was high growth. They were the darlings of Wall Street, a very, very profitable firm. And then like overnight, Netflix takes them out. So these things can change very quickly. So you want to think about that. One thing you could do in this paper, you also could think scenarios. We believe this is an inline industry. However, as such and such takes hold, we could see a 4 or 5 year rapid growth in this industry. Or if such and such takes off, we could see this industry decline really rapidly as consumers' tastes change. So you don't have to have one scenario. You could say, we expect this to be a mature industry. However, we're very excited about home delivery or whatever you're doing. That may take off. So, you know, think through scenarios as well. So you don't have to have a specific, just one answer at the end, but do make what you think is the most likely case there. All right. Comments on this? So beef up. Now your conclusion doesn't have to be 5 or 6 pages. It can be 2 or 3 paragraphs. You just want to bring together. So remember, you're going to have that Porter's chart that summarizes everything. Tell me what it means. So therefore, given all of this in a chart, we believe this is an attractive industry because, and give a good conclusion at the end. Under buyer power, that's where you're talking about consumer taste and demographics. That could definitely be a strong influence, probably more than anything else, into your final conclusion. On the macro, make sure you have some graphs on a macro factor. I'm specifically looking for that. So you need to have some graphics, but graphics on a macro factor. It could be demographics, it could be pay scales, it could be the cost of an input, whatever, some graph. What's the history of it? You could include a forecast, somebody else's forecast, if you have some source that you rely on that you think would be a good forecast of that particular item. I was looking at, there's an article in The Economist about Ghana and Ivory Coast, and that the heat is really destroying the cocoa plants there. And so chocolate prices are probably going to zoom here pretty soon. Brazil had the big sugar problem with sugar prices, and you saw how that really impacted Coca-Cola. Those are kind of things that are going to be interesting in your paper. Some of those are short-term kind of things, but you want to mention them in a paper like this because you'll update this every time you do the industry analysis. So look for something like that, that you can put that kind of gives you something to talk about, and you can do a graph off of it. There's plenty of places to do graphs. That's where Statista can really help you. You could do regressions. It gets a little tough to do regressions to say like, you probably have to pull some good data, but if you want to take cotton prices and regress it against Adidas and Nike's gross margins, I mean, you could certainly do that. That'd probably be pretty tough to do. Yeah, revenue growth and major players. We were talking about this. If you want to bring in margins, that could be interesting. A lot of the stuff you can get out of Capital IQ. So just remember, if you have 5 major players, 6 major players, there's a lot you can do to bring in data of those players and look at those numbers using Capital IQ or Bloomberg. If you need to know how to do that, then catch me, pretty quickly this weekend. I will be up here Saturday, but I don't think I can leave the FSC open, but I can ask anybody desperate for the FSC this weekend. So I'm here 10:45 to 1:30 on Saturday, but I'm going to be teaching a class, so I can't meet with you. But if anyone wants to come right after that, I could meet like at 1:15 or so. I'll ride my bike beforehand, so I have time afterwards. So, but you got to let me know. But if you desperately need Bloomberg or Capital IQ, because Capital IQ works really, really well in the FSC, let me know. I can beg Dr. Baynout to let y'all stay in the FSC with me across the hall so we can see. But you can definitely pull data for 50, 100, 200 companies. I mean, you can do a lot of companies all at once. Like with airlines, I pull every publicly traded airline in the globe. It can pull their numbers in. You can bring them in US dollars. You can do quite a bit of analysis. And then be real careful that you don't get into detail. This is probably not a big issue for you as a group project, but paper 2 is an industry analysis. It's not a company analysis. So don't, just because you're looking at one of the major players, don't overdo it because that's the company you're following. All right. If you talk about specific companies in paper 2, it's to talk about the industry, not to get into your company analysis yet. I always have that trouble with students who just like they do paper 3 and paper 2. It's like, no, that's paper 3. You got to wait for that. Any final questions, comments on paper 2 before we have our final meeting? Are your teams working well? I guess I'll find out when I do the survey. Teams are a pain, aren't they? Are you glad this whole class isn't teams? It's only 3 papers. I hated team projects, but this is a much higher quality group of students just because it's a scary class. So you're probably doing a little better than much better than most. All right, let's talk a little bit about this idea of corporate governance. I forgot to make the copy of the Bloomberg chart, so maybe I'll show you all that next week. But corporate governance, the Motorin has his corporate finance class online, so I've watched the whole thing. If you're interested in it, I can send you my notes from it. I have several pages of notes. I watched all of it. It's an interesting class. It's a pretty intense class, but he does some stuff we're going to do where we're going to have a really difficult model, but I'm going to give you the model and you'll just have to update your assumptions. He does that, like with his contingent claims analysis, he gives them a model. So he does give them a lot of stuff. It's real similar to this class, except for it's almost entirely group projects. So what you're trying to figure out, and this is for your company paper. We're talking about paper 3 here. When you get into that ESG section on governance, the G of ESG, what you're asking is this some management that puts the stockholders first? Or is this a management that's distracted? There's something else going on. So how do you find out the quality of corporate governance, and for the motor inn and for most investors is who takes top priority. So management has their own interests. They have stock options. They have other things that are going on. And they're going to manage their own financial interests first. And they have a huge incumbent advantage. It's rare that management is voted out by the stockholders. There's usually a pretty big advantage. So management has some power that's not always in your best interest. And then your board of directors. So you're going to have to spend a little bit of time on the board of directors. What I'd recommend you do is you look at the board of directors in their annual report. What I like to do, and it's tedious, but I like to do is I want to know who is on this board as far as their background. So I can talk more of it from insurance and banking, but I don't want a consumer staple person on my board if I'm JP Morgan, because banking is really complicated. They better have some background on banking. At USA's board, I met with several of their board members. Some of them had like, I don't know, PhDs, but they had degrees in quantitative physics or engineering. I'm thinking, oh, this can be a really mathematical person. I was so excited to show them all this investment stuff. And they're like, oh, I can't do that math stuff anymore. It's like, wow, you're on the board. USA is buying, $40–50 billion in bonds, and there wasn't a single board member with background in fixed income. And they finally hired one guy. Thank goodness he saved my job, because I had this big battle at USA to sell off a particular asset. He saved my, because he was the only board member who understood. So think about USA, there's board members, a bunch of what? Generals and admirals and whatever, a bunch of military people, very smart people, very quantitative, a lot of them, but they don't know anything about bonds. And USA is 80% bonds. So you're thinking about that. How often do they actually see this company? Do you think the CEO of McDonald's on the board of whatever firm, you think he's spending a lot of time on that board responsibility? He or she has their own job to do, don't they? So boards meet what, 4 or 5 times a year? Maybe 4 times a year with the quarterlies. That's the only, they get a book at USA. We gave them a book like this. You think they go through every page of that and look at it? So how much of a control are boards as far as really controlling your company? Often the CEO will be on the board. You want to look at that. How independent is the board from the CEO, or does he or she drive everything? There's a funny story the motorman told about the CEO of Disney, and he was on the board, and his personal lawyer was on the board. Kind of tells you where his priorities were. So look at the board members, look at their background. I don't know how quickly we can do that. Oh, I don't want 2020. Why is it 2020? Why would they put 2020 up there? They have corporate governance as a button. I don't know if that's going to tell you. So no one's doing McDonald's, but I would be definitely YouTubing him. So let's find the board. It's not showing it to me, so I don't, I'm not getting it out here, but get the annual report, the glossy picture of all the board members, get their names, all of them. For most of your companies are going to be famous people, probably senior management of the firm. Look at their background. If you got 20 board members, then, pick a few of them and look at them. I don't know how many of them put a biography of their board members in the annual report, but look at who they are. Try to figure out what their background is. I'm an opinion that boards are not that powerful because they're asked to do way too much in too little time. So most of them are very underworked because they don't spend that much time on looking at the firm. They're overpaid. I'd love to be a board member. I think it'd be great to make $100,000 to go to 4 meetings a year. That'd be kind of nice. I mean, I'll put some time into it, but I mean, and they're usually heavily influenced by the CEO. A lot of them are not necessarily independent. A lot of them just rubber stamp what the CEO does. Now, USA, when I was there with Bob Davis, USA used to be rubber stamp with the CEO, especially with McDermott. Bob Davis was unusual. He went to the board and told them everything. This is what we're doing. He wanted them to know what USA was doing. It was the most involved the board had ever been. He was going to them with very complicated stuff, strategies, those kind of things. Now, I don't know the board ever contradicted him and went against them, but he went and he presented everything that they were doing. He wanted the board's input. That was him. I don't know if the board member, the CEO's after him. But the CEO is powerful. So you're definitely going to spend a lot of time with the CEO, but do spend some time on what is the board doing relative to the CEO. Has the board actually, now you know that, you know, the chat GPT, y'all, that whole fiasco, y'all saw all of that. I mean, that was interesting when the board does something and it ends up backfiring on them and they have to give in. So CEOs have quite a bit of power. You can read the some of the SEC filings on conflicts of interest. Capital IQ, Yahoo, I don't know about Yahoo anymore, provide a score on each firm's board relative to the market. So you might try that. You might go into Capital IQ and just see what it has on the board, because when you bring up Capital IQ, it has that massive index on the right. There are certain things that show you that management is protecting themselves and not the stockholder. When you have these type of things, that if someone tries to take over the company, it's just going to be disastrous for the stockholders, and it's going to be a great windfall for the CEO. Management typically overpays for takeovers. So if your firm does a lot of acquisitions, you want to really understand that process. That's pretty important. And then we talked about this last time. Who is the largest stockholder? Is there an activist stockholder? And we'll talk a little bit more about that. Is there an activist stockholder on this group? Where does the power lie with stockholders, management, inside stockholders? I was looking at this report you can get out of Bloomberg, where it talks about insider tradings. So here's a guy at Tesla, some guy named Musk, Elon Musk. He sold 5 million shares. And here's Kimball. Who is Kimball Musk? Is that wife or daughter, or I don't know if that's a male or female name, but he or she bought 100,000 shares. So Bloomberg does have some insider type of transaction information that you can look at to see if anything's going on. So there are reports. You could probably go, I haven't tried this, but well, I don't see exactly what I brought up here, but you can just do the search on insider trades in Bloomberg and see what functions come up, and something will come up to give you some insight on that. Labor unions, how much power do they have in decisions the firm makes? And why do we not like large institutional investors? So this is really key if you're looking. So you have an activist versus institutional. An activist stockholder is going to try to change the company. They're there to fix things, and they're going to stick with it until they fix it. They're going to get management fired. They're going to make, bring a new management or have some acquisition, take advantage. What do institutional investors do when they don't like what's going on? They'll sell the stock and go buy another stock. They're at it. They don't have time to mess with it. They're not out there to change the world. I realize BlackRock has gotten a lot of bad flack for pressuring firms when it comes to global warming and other things, and he's somewhat have pulled back on that. But generally, institutional investors they're there to make money, and they're not there to fix the world, and they'll just get out really fast. So figure out if your firm does have an activist shareholder. Usually what I'll do is I'll look at the largest investors and try to find something interesting in that list. So Bloomberg will provide that to you. Especially once I get to the first human name, I'm kind of interested. Who is that? If it's the CEO or if it's the founder, I'm interested in that. So do some work on that in Bloomberg to kind of see. I'll try to bring some charts in on that. So what kind of stockholders can you have? Institutional tend to be the largest, and they'll probably be the first 5 or 6 or 7 on the list. The company might have purchased back its stock and have some of it in their pension plan. There can be governmental influences. They're not going to be stockholders, but they can have heavy influences. There are different voting rights. So if you look at Google, so you have GOOG and GOOGL. And any of y'all doing Alphabet? I don't think Alphabet's one of our firms. So, okay, so you're going to have to figure out under your governance, you're going to have to figure out what that is mean. Usually it means one of these groups kind of has the 50%, they're gonna win all battles. And who are the GO? So Meta, someone's doing Meta, aren't they? So I think Meta is set up so that the CEO has some special powers. So you want to understand those. So what's the difference in those two? Oh, I can't think of it off the top of my head right now. So you have to address those different voting rights. The other thing I would bring up here, I don't have this in here, is minority interest. I don't think any of y'all have minority interest, but look for it. It's a pain. It's a real pain. One of the reasons we're avoiding energy this semester is a lot of energy has these minority interest transactions. They're really complicated. They're very difficult to understand. So you may want to look at that. You can usually tell, you'll look in the financials, there'll be a line for minority interest. Just look at that line, try to figure that out, search an annual report. Hopefully you don't have minority interest. You don't have to deal with that. It makes it really complicated when it comes to forecasting. There can be family groups, cross holdings. That's not common in the US. It's been a big issue in Japan where, you know, company A has 20% ownership in B and company B has 20% ownership in company A. It's like they own each other and it kind of keeps the stockholder out of the question. What are you going to do if you have a founder that's been around and still hanging on? So is someone doing Meta in here?
It was, I think it was an art, but I don't think it was.
So y'all didn't pick that one. So is Netflix's founder still around?
I think so.
I saw an interview with him and he looked up in age, so I can't remember. But so yeah, if the founder of the company or founders of the company are still around, you want to handle that. So no one's doing Starbucks, but you're definitely going to be talking that. So cross holdings, family group cross holdings, those can be an issues. Activist investors can be good news or bad news. So it just depends on what you think about the activists and what their incentives are. That can be interesting. It makes the project much more fun to write about because they're going to have a very specific strategy that they're going to be talking about that you're going to have to address in your paper. So just see if there's anyone doing that. But the bottom line is this a firm that is seriously worried about their stockholders and have the stock price as their number one requirement? Which gets back to what the Demoteran says. What should management's objective be? Maximize earnings, maximize revenue, maximize firm size, maximize market value, maximize economic value added. So theory says this is what they should do. Economic value added is the bottom line, your return on capital versus the cost of capital. But what the Demoteran says is this is a tough one because there's calculations issues. So he says really what you want to focus in on, which is a good substitute, is maximize stock price. If you maximize stock price, you're probably maximizing economic value added. But theory says economic value added. Why don't you want to maximize earnings? Well, if you maximize earnings, it requires a lot of return, a lot of invested capital. Your earnings might go up, but your return on capital might be coming down because you're doing stuff that's very expensive, a lot of investment. Maximize revenue, yeah, if you're maximizing revenue on unprofitable products, that's certainly not good. The Economist had an article on GM and how they're cutting back. They're actually reducing revenue in their least profitable countries. Yeah, that's reducing revenue in order to increase profitability. Firm size, what has GE done recently? They split the company in half. The stock market loves it. So You know, firm size is not what you want. What happens if Amazon splits in two? Stock market would probably like that. What happens if Disney splits up? Market would probably like that. That's something you might want to talk about in your firm is would they be more valuable if they were split into more than one group? Market share, obviously that's the same thing as revenue. You don't want them focused on that because that's usually going to be a killer on margins. So how do you know if management is maximizing economic value added? That's what they say. That's why you're listening to management. What do they say is their top priority? Go into your annual report and see what graphs they're showing. Are they showing graphs on return on equity? Are they showing graphs? They're probably not going to show economic value added, but what are they showing? What are they focusing on? They focus on market share. They focus on revenue growth, expansion. You know, you don't want management talking about expansion without talking about returns on capital, because expansion is a lot easier than profitability. So what are they saying? This is the area where quotes are really, really good. You got to get some good quotes from the CEO and have it highlighted in your paper. Really, really important in a paper like this. The motor end says boards are becoming more independent. They're becoming smaller, which helps. Fewer insiders. Directors are being compensated the way CEOs are being compensated, so they have more incentive. And there's more independent committees selecting the board members, but that may not be true of your companies. So you need to look at it and see. I don't know with USA about their process for selecting board members was. Most of them had a military. In fact, if you look at USA's report of all the board members, most of them are in uniform when they take the picture. So it's very military, which makes sense. But at the same time, it's a financial services company. So, you know, you'd hope you have some people who have the background in that particular industry. All right, I want to look at a couple of more paper threes. Let's go back one more time to the outline. So you're going to talk about your company. Definitely talk about their main products. How many products do you get into? So if you're doing Procter & Gamble, you got to put it into categories. Okay, personal care or whatever. You're not going to talk about individual products. But if they do have a product that's, you know, a big chunk of their revenue, then certainly talk about that. Who are their customers? What's the geography that they're in? What's their market share? So let me understand the company. Some papers you're going to see spend, like the Microsoft one, he spent pages and pages on the products because Microsoft does so much. If you're doing semiconductors, you may spend quite a bit of time just defining the different type of semiconductors and what industries they're in. So you might spend more time in one place versus another, depending on your company. If I were doing retail, I would definitely be talking about customers, especially apparel. You're going to talk about customers, which customers are these advertising to. One thing I think is really helpful is go to their website. If I can find it. And what do you think is going to be on the front cover page of a Ross? It's going to be a woman in a dress. It's going to be someone wearing shoes. It's going to be kids running around. What do you think? You think so? Oh, that's not it. How do I get Ross's? Let me try www.ross.com. That's probably going to be some bad site. So no, that's not it. All right. Let me just do Ross stores website. Are one of y'all doing Ross? You are? Oh, they got, is that Melissa? Who is that? Maybe not. Well, not wearing a dress, but green jeans. So yeah, who's their customer base? Is this they're not selling them in, right? So it's probably going to be their customer base. They got shoes. They're showing shoes. So, you know, their website tells you a lot. I remember once we were looking at a stock that was interesting on our list, and it was an advertising company, and went to their website. Their website was so boring, a lot of thick text. Like, how could a firm that sells advertising have such a horrible website? It was really pathetic. So go to the website, see what they're pushing. I don't know if you can even go to Netflix's website, can you? Are they gonna ask me to log on or is it gonna be something else? Sign in. So you can't even get to their website, can you? Do they have anything on their website? So one of the things you have to talk about is customer acquisition. How do they get new customers? How does Netflix get new customers? What are they doing? They're advertising on TV. They have some kind of deal to get people in, you know, so they have some stuff here. I used to have an account at Netflix, but I don't remember what it is anymore. So go to their website and see what their website is telling you about this company. Some of y'all, like if you do Deere would be an interesting one. What do you think is on Deere's website? The tractor? Oh, compact tractor parts. There's a bunch of tractors. I don't know what that's at the top, but that may be something just focusing on right now. Find a dealer. So that's pretty important. All right. So there's pretty critical there. Distribution of your product. Find a dealer. So are these dealers independent? Or are they actually dealer employees? That's going to be important to understand. You know, there's a lot of things. When you go on the website, you start thinking, wow, they have a finance button. Does Deere actually do financing? Do they do it or they do it from another party? So if you think about Ford Motor Credit and GMAC, that's a huge part of those businesses. That's actually the majority of their profitability in most years. GM is almost a bank that also sells cars. So that's interesting. Parts and service. Okay. For Deere, they sell tractors, but they make most of their money selling parts to repair tractors later. That's going to be really important. How do you figure that out? How much of Deere is the selling up front versus the service? And do they have service contracts? You know, just going to their webpage, you start seeing a lot of ideas coming up. Digital, I don't know what that means, digital tools. Our company and purpose, that may find you some stuff. Probably that's going to be in the annual report. So there you can see their products as well. You can see what categories they're in. So the webpage, just going in the webpage, you suddenly start seeing who is this firm because that's their front face to most of their customers. So a lot to do there. Some history of the company, but not tremendous amounts. Hiram, I found, you know, if you email me, I'll try to send it to you. But I found a really good video of Netflix talking about the entire Blockbuster controversy and how Blockbuster, they're trying to sell themselves a Blockbuster. It was really, really interesting insights on the company. So how did Costco start? I have no idea. Did it start in some small city? So some of that early history might be interesting, but don't get carried away with it. Again, business breakdowns is perfect. The way they do histories, they always start with the history. So you might listen, not maybe you can't find your company, but maybe a similar company. At the beginning of the podcast, they start with the history of a company and you can hear what they're focusing on. And they do a perfect job, but that's the perfect level of that you need. What's unique about this company as far as its management style, its culture? What does it feel like to work for a firm like this? You know, certainly Costco has a reputation for treating its employees a lot better than other companies. How much does that cost them to do that? Why did they do that? Senior management, we've always talked about that. You definitely need to spend some time there finding your management, your company. I say possible, but I'm changing my opinion on that. I think you've got to have an ESG in there somewhere, even if it's only a couple of paragraphs. So I'll try to remember to bring you some Bloomberg charts so you can see. And I think the S is probably the least important from an investor standpoint. Not that we're money grabbing, you know, don't care about people, but it's just from a valuation standpoint, it tends not to have that much impact. The E can be important, maybe. Why is the E important? Well, because there are ESG funds that are almost entirely environmental funds. That's kind of in their focus, and firms that are ESG tend to see their stock price go up just because they can go on those mutual funds.
What metric would you use to measure like social?
Bloomberg has them, so they're like how many women are on the board, how many minorities are in management. They have stuff like that. Yeah. The firms answer the questions. I don't know how trustworthy they are, especially on the environmental, because I don't think there's a lot of rigor behind this stuff. If you look at Bloomberg, you're like, yeah, who's really checked these numbers? And I don't know if audit firms, and y'all might know, I don't know if audit firms are actually doing ESG audits now to see, you know, if Microsoft says we're going to be zero emissions by so and such time, and you discover they're not zero emissions, they're buying carbon credits from somebody else. It's like, was that really doing anything? So I think there's a lot of kind of playing with the books right now that we can't trust the numbers, but I think this is more for university. You're supposed to put it in there so it looks good on LinkedIn. So yeah, that's kind of the cosmetic side of it. You know, I'm old school. We didn't have any ESG when I was doing this, so I just don't think about that. So maybe I'm too cynical. We will have an outside speaker, and we can ask the outside speakers one or two. Remind me to ask the ESG question. Do you care? And he'll say, "Can you pause on the recording?" And I'll answer that question. That may be what he says. And then spend a lot of time on the position of the firm. What is it that makes this firm unique? What do they have that others don't have? Is it sustainable? Think of it in terms of the value chain. Is it how they acquire raw materials? Is it how they produce? Is it production? Is it how they market it? Is it how they distribute it? What is it that is the key function for this firm? So we saw with Costco, it's the supply side, it's the few SKUs, it's the membership, it's the dedicated customer base, it's the dedicated employees. They've got quite a bit going for them. So the reason I love Costco is they're very strong throughout the value chain. They're very leading edge throughout the value chain. That gives them extreme advantage and economic moats. So you're going to spend quite a bit of time here. And I can't tell you exactly what you got to do because it's going to vary by company. This again is where you're talking about growing, mature, or decline. One thing you could definitely do, I wish I had Capital IQ up and loaded. One simple thing you can do is Capital IQ, just dump in the financial statements and just look at annual growth rates on revenue. Just look at them. You don't have to do graphics or just look at it. And then look at growth and EBITDA, just annual growth. Look at the last few years, look over the long term, give yourself a sense of, you can almost just visualize it. Was this a firm that was growing fast and now it's leveling off? This is a firm that no longer leveling off, it's now coming down. It's a firm that's still in a steep incline. So do that kind of thing. I don't know if I have a chart I can show y'all. Let me see, maybe I can do one. You wouldn't necessarily put the chart into your paper, but you could certainly, I'll do Deere since I was just talking about them. Oh, I did the wrong one, sorry. I don't, let's see. I need one that doesn't have Capital IQ. Well, I'll do Old Dominion. I don't think that's going to be high growth. So you have their revenue. So it's just as simple as, why does Bill Gates make you hit that button like 40 times? Like, are you sure? So, and then Zoom is right in my way. So yeah, I'm suing both of those companies when I retire. So just look at it. You can't even just do a really quick graph. And just see, and that doesn't tell you much. You could do 3 years over. I mean, that's one thing you see very, very cyclical. They've had incredibly high growth periods. They've had negative, that may be 2020. I don't know what's happened here recently. But if there's no trend at all, you know, maybe it's mature just because it's all over the place. But you're trying to see, is there something going on with this firm? I wish I could find another firm besides them. Yeah, I don't know why I don't have more companies in there because I had a bunch in there. So some way to get some sense of, is this a firm that's in its growth stage, its mature phase, or its decline phase? And that competitive position is going to tell you something about it. It could be a really competitive firm in a declining industry, or it could be a declining firm in a growing industry and it's losing market shares. So try to get a sense. So it's almost kind of the mirror of what you did on paper two on the industry. This is the company within the industry. So you could have a mature industry with a growing company because they're taking over market shares. So you can have different combinations. And then you're going to do your SWOT analysis. And if as much as you can incorporate other pieces into your SWOT analysis, you don't have repetition. So no reason to do a risk analysis. I would put that under threats, but I definitely do a SWOT analysis. And then you need another final conclusion. Where do you see this firm in the industry versus its peer? Is this a strong player in a strong industry? This is a weak player in a strong industry, a strong player in a weak industry. Where does this fit in? You've already talked about the industry. So if you said, hey, this is a high growth industry, is this a high growth player in the industry, or is it just in the packs, or they're all growing fast? It's falling behind the pack. Something you can give some kind of conclusion. All right. So I do want to show, let's look at a paper we haven't looked at yet. I want a more recent one. Let's try Coke. That's a really old one. Well, Coca-Cola is a really old one, but it's one of our champions. This student, I might try to get him to talk to the class, but he was working at JP Morgan here in town on a call center. And he told his boss, I want to be a security analyst in New York. And his boss said, yeah, right. He said, yeah, just give me a chance. So he kept pestering his boss. His boss said, okay, I'll get you an interview. And after that, you got to shut up. So he got an interview. They gave him 1 weekend to write this paper on Coca-Cola. He emailed me to me. He said, what do you think? And it was really, really good. And he got the job. His boss was just like, get him off his case. And so he went as a security analyst. I actually have reports of his name on analyst reports with JP Morgan, even 1 year out of school. So he told me, yeah, I'm going to stay on the sell side for 3 years, then move to the buy side. And then 3 months later, he was on the buy side. So he didn't last very long on the sell side because no one wants to stay on the sell side. But so I'll show you, this is an old one. It's kind of dated, but he did a really, really good job. Here's his industry analysis. Yeah, Tiffany was asking me, some of these papers don't look like what we're assigned here because we did papers a little bit differently. So they had it where the industry analysis there was a separate paper for macro analysis. So there are 2 separate papers, but I want you to incorporate those all into one with reporters. So the company analysis, company overview, key executives, again, probably too much discussing on that. He had a section on acquisitions and partnerships, which is huge for Coca-Cola because they know soft drinks are dead. And so they've been buying the teas and the waters and the energy drinks. They have a joint venture with Monster. He has company risk factors separately. I don't want you to do that. I want you to put that under threats, but definitely obesity concerns is a huge threat for all these firms in the soft drink area. So all of these would be threats. Competitive position. You can see the competitive position is a discussion. No charts there, but he probably could have done. And then he has a SWOT analysis. It would probably be better if he bolded some things in here. So I don't know if he did a summary at the end. So if you're going to do a SWOT, start with the table, a summaries table, and then get into the text later. I think that works better. So strengths, weaknesses, opportunities, threats. This is a very good paper. It's lacking on charts. I think a paper like this should have more charts. So it's too much text. So if you can find ways to put some charts in there, that would really, really help. It's, 4 or 5 pages could be enough, but yeah, the charts it's probably going to expand out to 7 or 8 pages, but it doesn't have to be a massive dissertation. So, and yeah, there he is. Y'all know him. Really, really impressive analyst. I could tell when he was in this class, he was He was set to be an analyst. He had the right mental discipline to be able to do it. You really have to be disciplined in this industry because no one tells you what to do for like 3 months. You're just sitting there. You better have something to show for it. So I did accounting, and accounting, I knew I was doing every single minute, every single day, and there's someone asking for numbers all day long. In finance, you sit down and you're like, what do I do? And it's like, well, do whatever you're supposed to do. Okay. And you teach yourself, you do, it's a little scary. Well, we have Adobe, so let's do one last one. Let's look at Adobe. I can't remember who wrote Adobe, but the name's probably going to be in there. They did a great job. Actually, this is one of the ones. They did a great job on making their executive summary look like a sell-side report. So that one's a really good example. You don't need an index. Don't do an index. I don't like indexes. So someone in here who's doing a stream. Oh, Nanoska. Okay. So again, company history. He put the stock price in there. It's kind of out of place there. It really belongs better in paper 5, so I don't think that's a good place. It was founded in 1982, so it's a pretty young funder of a firm. If it's young, you may talk about the founder some. It's flagship product. That makes a lot of sense to talk about. They do an acquisition side. He has a section on corporate culture that can be really, really good. Yeah, you can put the pictures of this, but remember, you're doing this like a sell side report. This looks like an annual report, so you probably don't want something like that. It looks too much like an annual report. You want this to be objective. It's not like you're advertising Adobe. You're objectively talking about them. Yeah, it's interesting to me. He owns patents. Okay, that to me is interesting. He's got electrics engineering. So this is someone who understands the business. That's good. This isn't some Harvard MBA. That's good. He's probably got a little too much here. What's missing here? We don't see yet is anything on strategy. What does this person want to do with this company? What is his focus? What is he talking about? That's what's missing. So what do you need right here? Maybe they do it later. I don't know what comes next, but a really good and italicized centered quote from this management of what they're focused on. Some firms give it to you. Our 5 key strategies for the next 10 years. You have it. They just give it to you and you put it in your papers. Some of them make it really easy for it. I don't need to hear about the CFO. Business segments. Yeah, you can definitely have a pie chart. I wouldn't make it all blue, but have a pie chart showing what their main business lines are, especially if they have a small wedge that is a big focus that they want to grow that pretty fast. You want to talk some about that. So yeah, you can definitely talk about the different segments or different products. Geography. They do have a graph on geography, Americas, Asia, Europe. You can get geography from Capital IQ, so that can be good. And then competitive position, the most important part of all. They do show a market share graph here. Adobe, I don't really understand who their competitors are. Because it's not a business I use a lot. I see Adobe all the time, obviously because of PDF. But who exactly, I mean, who do you go to if you're not going to use Adobe? They certainly have their group of people that they cater to. So strengths, good use of bolding. Weaknesses, I don't know why that was in yellow. Opportunities and threats. But again, there's no summary table, so put some summary table in there. And then what's missing? Got to have a conclusion. So you're talking about the company. What does this all mean for the company? All right. So I want to get a little started on paper 4 because we're going to use next class probably for paper 2. But can we leave paper 3? So you're all thinking, I'm trying to get paper 2 done. I can't even think about it. So when y'all feel comfortable to get into paper 3. So this outline is in the syllabus for the class. So one thing I'd say that I got from the motor inn when you talk about strategy, we're going to talk about this more in paper 4. But he says when it comes to strategy, there's possible, plausible, and probable. He says you really want to think in those terms. So what does possible mean? You could see that it could happen. You don't have any data to support it. There's no examples of it happening, but you could see it. Plausible means someone has done it. There is a business model out there that is working. Your company hasn't done it yet, but someone else has accomplished it. So you know it's possible because someone has done it. Probable means they have a business model, it's working, it just hasn't scaled up yet. So it looks like, they're growing fast. It looks like it could happen. So let's take an example he gives. Uber does AV, autonomous vehicles. Could Uber, instead of having drivers, just do autonomous vehicles? So you got to think about that. How would Uber actually do that? Would they buy autonomous vehicles, or would they contract with individuals that have autonomous vehicles? Either one of those would work. What would Uber buying autonomous vehicles mean? A radical change in their business model. They have a very capital light model. What happens when you're going to buy tens of thousands of autonomous vehicles? Now you have a capital heavy. So you got to think through that. And that's why Damon Darren, he does it, the motor end does it so well. This is the story behind this company. So think about the story behind this strategy. Management says our focus is on this. Start thinking about that. What does that mean? Do they have something that's all this? They have something that no one's doing yet, and they're talking about it and they're going to develop it. Are they doing something their competitors are doing and they're going to start doing it so it's plausible? They're talking about something they're already doing. It's working. They just got to scale it up. That's on the strategy side, I think, is a really, really good approach to think about your firm. And then we'll talk about how do you take that and expand it into a forecast so that you don't have your firm getting 140% of the market share. He does in that book. I don't know if you're still reading it, Carlos, but his discussion on Tesla, I thought was really, really interesting, on just what market is there out there for electronic vehicles, what percentage would EVs be of the entire market, what are the Chinese companies going to do? So he talks about scenarios. The best one is Tesla's 40% of the market. That's his top one. How many billions of dollars is that? We know how many cars are sold in the world, so you have a sense of the entire market. And that is part of what you're thinking about is what is the total market? Is this a market of 10 million people or is this a market of 5 billion people? How many Apple phones are there out there? How many how many cell phones are out there? It amazes me in Costa Rica. I wish I'd taken a picture, but it would have been awkward. But there's an indigenous young lady on a mule with the beautiful, regalia of her culture is beautiful, looks so authentic, looked like something out of the 1900s. So beautiful. And she was on her cell phone texting somebody. That would have been such a great picture because they don't have electricity where they are. So I don't know how they even charge their phones. They have solar panels that they use. But yeah, cell phones are becoming one of the most ubiquitous products out there, more than even Coca-Cola and everything. So you can get that data. Statista has that data. You can certainly get the data of how many cars there are in the world. Then you can try to guess how many EVs will there be. What's the turnover going to be? That's the other problem with EVs, that they last longer. So you have to think. So that's what Dan Darren says. You got to put a story to this strategy. What does it really look like? And try to be as objective as you can. Try to get data behind it. That's the other thing Dan Darren says. Don't tell me this firm can't be forecast because there's too many uncertainties. Put numbers down. The ranges can be extremely wide, but put something down what looks reasonable. And so he says, start with what is the entire market size for this? And then what could this company conceivably gain of that market share? And what does this look like over time? Those are really good ways. And you don't necessarily have to get a detailed forecast, especially not in paper 3. You're going to try to do that in paper 4, but you're going to start leading up to that. Where is this firm going? So have something on strategy. What is this firm doing that is different? That's why we pay management so much money. We don't pay them to keep the trains running. We pay them to change the firm. So what are they doing to change the firm? That should be a huge focus of your paper 3. And then in paper 4, you're going to try to put specific numbers to it in your forecast and your analysis. Okay, is that all seem logical? All right, I know you're all like, it's paper 2, paper 2. All right, let me introduce paper 4 just so we can get some of y'all. So Beverly, you've done this before, right? You were in my business finance. Who else? You might be the only one. Anyone else had me for 3013? Okay, so Beverly's, she'll, for, $100, she'll show you how to do it. But no, we're going to do it. So, but you're doing a different company this semester, right? Than you did in my class. So you won't have any advantage there. But this is the format we're going to use. I've already got the template build. All you got to do is put your ticker in there. So I'll show you how to do that, or I'll do it for you, but I'd rather you do it so you can learn some capital IQ. I used to have all this set up in Bloomberg, but I've started using more capital IQ so we could learn both of them. So I was able to get almost the entire spreadsheet converted from Bloomberg to capital IQ. You should look at the formulas, get used to the formulas, see what you're doing. If you look at the look at it itself, I'm not in capital IQ here. So here's the capital IQ. If you bring up I got it valued here, but you have capital IQ formulas here. Capital IQ and Bloomberg are a little bit different. Capital IQ has this current year, prior year, prior year, prior year, whereas Bloomberg, you have to put the actual year in there. So you can get, it's possible you can get years a little bit off. But everything is built. What you have to do is decide on your company and its competitors. And the spreadsheet, and I may bring my laptop in here so I can use Capital IQ in class. I've tried to get Capital IQ loaded on some of these desktops and it's just not possible. But the way the spreadsheet's set up, I've got the entire Russell 3000 in there, and I have the different sectors, and you can sort it by different columns and try to figure out who are your companies. You see what I did with Walmart? I actually use multiple industries. So I have Walmart and Costco, but also brought Amazon in. I have some other. So you can get creative. What you're trying to do, you can see here, he's got 26 companies. 26 is pretty good. The spreadsheet does as many as 50. So you're trying to do is define your industry. And so we're going to bring this in using, there is some Bloomberg over here on the right. It's all my Bloomberg stuff. So I did like, I couldn't find certain stuff where employees is probably one of those. I think I brought in here, but I brought it like WAC EVA. You can't get that out of Capital IQ. So there are a few things, but all the Bloomberg stuff is hard coded, and I use VLOOKUPs to bring your company in. So one thing you may want to make sure of when we get to this one is make sure your company's in here, because your company's not in here. I need to add it so that you have it. I think all of your companies are in here, but in case it's not like you were doing Coco, right? Jonathan, and I doubt they're, is that it? So they are in there. So yeah, I guess they have to be because we ran our model off of this same group. So, so where are we going with this? We're going to do an analysis, a financial analysis. This is, I think, is really critically important. What I've discovered with undergraduate finance students is that probably 80% of them don't know how to do this. And the reason they don't is so many of their classes, the instructor gave them everything and just had them do certain ratios versus like, go analyze this company. A lot of my interviews, ask the student, how would you go analyze a company? And they just sit there completely frozen. So someone gives you a company, say, go analyze this company, how would you do it? I'm giving you a template to be able to do that. That is a perfectly fine template. If you went to JP Morgan with zero training and you just did this template, you'd be fine. I had one student who was an intern at Citibank, and they had a group, a team of 5, and it's this competition between the interns. And his team gets together and what do we do? What do we do? And he said, I have this crazy professor. He had this model. Why don't we use that? And they said, yeah, we'll do that. And they end up winning the competition because they had something to work with. So it's perfectly fine. I can say it's great, the greatest thing in the world, but they're not going to think there's something wrong with you if you use this template, all right? It's a perfectly acceptable one to use. The way I break it up is let's first make sure that the firm's not going to go out of business in 5 years. So we're going to look at the short term, and then we're going to have our major focus is on growth. And this is going to be really, really important to your forecast. What's the most important thing you forecast, do you think, over everything else? Single most important thing. One thing dominates everything else. What would you, if you could only get one thing in the forecast perfectly right, and everything else you had the forecasts, well, I might say earnings on that, but what one thing?
The sales.
Revenue, exactly. So your focus is on revenue. That's why I said, if you're looking at the firm's trends over time, look at the revenue, see how the revenue is growing up and down. So you got to get revenue right. That's the most important thing. So we start with the top line growth, the revenue growth, profitability, and overall, and then we'll do an ROE decomposition. And then I'm going to help you build a forecast. That's the other thing I discovered is most finance students don't know how to do a forecast. Have y'all had a class on forecasting, like modeling or something? So if you've never built a forecast, you're going to build a forecast in here. I have one built for you, but it's not a very good one. So yeah, and I'm going to actually, Ryan's paper I showed you, he has an approach. There's several different approaches I'll show you that you can try. Depends on your firm, and it can be pretty tough. I doubt any of you are going to have great forecasts because it's really is tough, but you need to get somewhat in the nitty gritty. But after you build your forecast, you can then go to Bloomberg and compare your forecast to the forecast in Bloomberg and see if you're way off. One thing that has surprised me, like I did a forecast for Costco a few semesters ago. I did like 3 semesters where I did a class on forecasting for the Investment Society. And we did Facebook and we did Costco and maybe one other. But it shocked me doing Costco. Costco's revenues soared after COVID. You go to Bloomberg, it shows revenue soaring and then going up from there. It's like, that doesn't make sense to me. People are not going to keep going to Costco at the same level. So even the Bloomberg forecast, some of those just look way too rosy to me. But it gives you some background to just see, hey, what are other people forecasting? Bloomberg will show you revenue, earnings per share, EBITDA. It will show you several items. You have to be careful with how many forecasts they are, because sometimes you'll have 10 analysts doing the next 2 years and only one person is doing 5 years out. So that's just one person. It's like not much there, but do a forecast. So has anyone here never done a forecast in your life of a company? Just 1, 2. All right, a few more. All right, so you've got to do it before you graduate. Right? It might be the first thing your boss asks you because they're going to assume you did it in 20 classes undergrad, and you have to be able to do a forecast. But we're going to start with that revenue. If you get a good revenue forecast, the rest of it will probably be pretty good, because if their gross margins have been 28, 29% the last 7 years, guess what you're going to forecast? 28.5%. Okay. If their SG&A has been 23% of revenue for the last 20 years, that's probably what, so the nice thing, once you get revenue in place, the nice thing is most everything else you can somewhat track off of history. You have to ask questions about, are things changing? They're selling more of this product versus this product, or we're heavier now in Latin America. You have to ask those kind of questions. So this is where we're going. Maybe next Thursday, we'll see. I'll let you know this weekend where we're going to go. So when your team is ready to present with me, email me immediately and we'll start setting up time, but I'll let you know what times are available between Saturday, Sunday, and Monday. Probably Sunday night, Sunday evening, and Monday are going to be the best times. So if your team's ready to go now, let me know and we'll get going. All right. So no questions. Everybody's doing well.